All right, episode
3
of
the More Doors podcast.
Today we are going to do a deep dive of our current 96-bed student housing that we just acquired a few months ago. We're going to get started right now. Welcome back to
More Doors podcast.
This is episode
3.
If you're loving this content, if you're liking this podcast, you're watching it on YouTube, wherever you're consuming this, please be sure to either leave us a review, subscribe, comment, find us. You can go find our website and subscribe to our newsletter so you can get updates of what we're doing with our current investments and acquisitions, maybe what we're looking at. Or if you want to become an investor in one of our future upcoming projects, you're going to want to go to deepbluere.com, deepbluere.com. So today we are going to talk about, we're going to do a case study of our current acquisition that we acquired. It's a 96-bed student housing facility in Waco, Texas. And so I've got my partners here, Brian Force and Matt Buchowski. And what we're going to talk about is, number one, how we found that deal, right? Because at that time, we were kind of in the middle of all the chaos and all the noise of interest rates were skyrocketing. We weren't sure what was happening with the economy. Inflation was just, at that time, bananas out of control. And this came across, I don't remember, I think Matt, this came across your desk.
This is a broker listing, yeah.
Oh, so it was actually listed. It was not off market.
It was fully listed, and we took it down. It was good.
Yeah. Well, that's the end of the show.
No, it was you hit the nail on the head. So we started this project last November.
I think it was before that. I think if I remember correctly, we got the initial email in September, and I think we started to talk about it in October.
That's right. That's right. So we got the LOI accepted in November. So we were working on it for a while, and that was kind of because of all the market forces at the time. That was Jerome Powell's blowing up the world every day. Every time he opens his mouth, interest rates are going through the roof, But we're also coming off of this wild ride of increasing asset prices for a few years and also insane rent growth. And there was just a lot to really stress test in our models. And it was also, a time where a lot of people were just getting out of the way and getting onto the sidelines. And we talked very deeply about that as well. Like, is this the right time to be looking at deals, doing deals? And we came to the conclusion, and I think this is one of the core operating principles that we sort of abide by, is like, the variables are just the variables for that moment in time. You got to look at your deals based on market conditions now and what you project market conditions to be in the future. And if that means you're working with rates as they are right now and what they're projected to be in the future, well, you can't look at the past and say we're going to wait for it to get better like it was in the past, because 3% interest rates aren't necessarily better if they push asset prices way up and have skyrocketing competition and skyrocketing rent growth and demand. Then you run into all sorts of other issues down the road. And so when everybody else was sort of getting out of the way, we were adhering to our core principles of what are the variables and the things that we can control right now, and what do we forecast in the future. And we saw an opportunity with this deal where I think a lot of people weren't even really looking because they were kind of scared.
Yeah,
I think a lot of people were paralyzed too with everything going on in the market, and there was just so much fear. And I think what we did initially, and I think what we did a very good job remaining through underwriting and due diligence, was really just focusing on the math. And every time something changed in the market, we would recalibrate. Does it still make sense? How do we continue to make this make sense? Does the market support the assumptions? And we eventually got it to the finish line.
And I do want to break that down here towards the later part of the show. So please, make sure that you stay tuned into this one all the way through. But let's go from the top, right? So this was a on market. It was broker listed, and it wasn't something that, as we were talking about this, it wasn't necessarily on our radar, right? Because this is student housing. Now, I have a background. I own it's over 200 units that is student housing, but it wasn't designed to be student housing, right?
Yeah.
I own close to 200 units in Denton, Texas. It's near UNT and TWU. Just so happened that students wanted to live in a duplex or townhouse, and they all just, they would all just rent out rooms, even though it wasn't set up the way that we have the Waco deal done. So this comes across Matt's desk. He goes through the initial underwriting pass. The cool thing that we liked about it is it was not a heavy lift in terms of a capital improvement. So it wasn't. It's not like this is an older asset. It was built in, I believe, in 2001.
2003.
2003. That's right. 2003 and 4.
2004.
All of them are 4 bedrooms. So it's 24 total units, and they're all 4 bedrooms, 4 bathrooms. There's a shared living area and a shared, obviously shared kitchen and an ensuite laundry.
Yep.
So they don't have to go to a laundry area. They don't have to go off site. Yep. It's all there. And ultimately, even the units, as we started doing our due diligence, either from the photos, again, it was built in 03, 04. So it was at that time, it's more updated than most of the stuff that we're looking at.
Right.
I know we looked at some others, even in the Waco area, and we were looking at stuff built in the 60s and 70s. We ran at those deals that we were looking at in underwriting. Those had cast iron plumbing that would have been $300,000 to $400,000 of just plumbing work.
Yeah, it's crazy.
And a lot of interior updating that we would have had to done on those. There was nothing on this one.
Yeah.
Right? It was just, we could make the property look sexier. And what we determined was that, ultimately student housing, there's less competition, right? So we talked about how competitive was the deal. We were bidding there was multiple bids on this one.
Yeah.
Mm-hmm.
But it wasn't like, we knew that the broker kept coming back to us, so it wasn't like they were getting bombarded.
Right.
With LOIs.
Right, 100%. And that's kind of one of the reasons that I think it fit our buy box a little bit, even though it was an on-market deal, was, not a major CapEx. That wasn't really the value add opportunity. We pretty much identified right away from our background in property management and just our level of experience that markets or rents were way under market, not because the asset was in poor condition, but because the asset wasn't managed well. And we actually had a familiarity with the sellers, kind of understood a little bit about their background and portfolio. And this was just a piece of a larger portfolio that they really weren't experts in. It wasn't in a geographic area where they specialized. And it had just sort of fallen by the wayside from a management perspective. So rents were just well under market for the sheer fact that that's what kept them from having to turn the units over, which is kind of a headache if you're managing a property remotely or asset managing from afar. And so they kind of just let this one fall by the wayside for the last few years. Without a heavy CapEx lift, we're still able to push rents if we get in there and really get our hands dirty. And that's exactly why it fit our buy box, because we don't mind rolling up our sleeves and taking advantage of that type of opportunity.
Yeah, let me jump into buy box for a second too, because I think this is important. When we first got together, we were talking about conventional, right? And we thought we wanted 2,000 plus build. We wanted a certain number of units. We were comfortable with deals up to a certain dollar amount. We wanted minimal CapEx, and this opportunity checked almost all of those boxes. So it's like, okay, so now we're unfamiliar with the student piece of it, but who do we know that is?
Yep.
Right, and hence our outreach to certain property managers and people that we knew in our network, and that helped solve for the variable that we weren't sure of, right? And I think that's really important. Second, and this goes to your point, Brian, is when we first toured the property, we noticed signage on the property that was advertising rates well below what the market was supporting. And I think what they did is they put themselves in a situation where they weren't attracting the best tenants.
Yep.
When you are the lowest priced product in the area by far, you may not get the best tenants.
Yeah.
Right. And so we saw that opportunity. We knew the market could do better. We knew with a little new lipstick and some minor upgrades that we can raise the rents 10 or 15%, which has worked out very, very well so far. And it's all management execution now.
100%. We're actually now a few months into our business plan, and we're ahead of schedule on being able to push our rents to the next level.
Well, let's hold that real quick because let's go down that
Don't
list.
jump.
Oh, sorry, I didn't even see that
You're
down
going
the
out-
list.
You're
I thought
jumping.
we were
Going
just
out of
having
order.
a conversation.
Yeah.
You guys
Come
are
on.
way more dialed in than
No,
me.
that's
My
okay.
We have
apologies.
an agenda.
Yeah, that's
sorry about
okay.
that.
Come on, there's
So-
bullet points.
So as we were going through, that's my job, right? So my job to keep. Let's go back down.
You know,
the
I don't
list
get in
and check
trouble
down
on the
this.
other podcast.
Yeah.
That's
And-
residential. Doesn't
yeah,
count.
Yes, exactly. Everyone strives to be that multifamily investor, right? And
I gotta up your game, pal.
yeah. So as we are going through our due diligence, one thing that we really wanted to do is make sure that we put that detective hat on, because what we've noticed is that you're not always getting the full truth, and you're not always when you're going through the financials and you're going through talking to the broker, they're not always forthcoming as maybe you would hope that they would be. And so ultimately, as we were peeling off each onion layer, we quickly discovered and determined that the previous owners had gone through 3 or 4 property managers in a short period of time, and we found that when we visited property, the rents were being advertised well below market.
Yep.
And because they were bleeding, they were having an occupancy issue, they were just putting anybody that was willing to sign a lease into that property, whether they were a student or not.
Right.
And so as you're advertising student housing, students want to be hopefully around other students.
Right.
Yep.
And what we found is that community mixture wasn't there.
Yeah, we're building the right culture.
And as we went through and did our on-site tours, we noticed that even the property managers weren't doing their part, right? There
You
was
mean
no.
when the guy showed up for due diligence and just threw us the keys and said, "Bring them back later"?
Yes, exactly. That was one. That was one. And 2, as you're walking around and you're seeing, oh, all the exterior hose bibs are leaking.
Yeah.
Yeah.
Or we noticed that there was heat on and no one was living in those units.
One of the units we walked in was 86 degrees,
Yeah.
and it was empty.
Yeah. Nobody was home. Yeah.
Nobody's
It's crazy.
just wasting utilities.
Yeah, so we start going through and it's like, okay, this asset more than likely has been mismanaged. And we can come in knowing that what do students do? Students don't always typically just drive around. These are younger. We're seeing that these are now they're not freshmen, because freshmen have to live on dorms in Baylor. And so ultimately they are undergraduate and a lot of graduate students. And so what Brian and I did, and our responsibilities is the helping with the marketing aspect with our now hired property management company. What we found during our due diligence period online and a lot of the Facebook groups is that this is where a lot of the transactions happen.
Yeah.
And you can start to see, you can quickly pick up that what going rates are for student housing. And after, how many underwrites did we do?
We had 16.6 versions.
Yeah, just different variables, stress testing different models. Yeah.
16.6. And the biggest question that we had was, could we push the rents up to what our underwriting projections and formula was?
Yep.
And even when we're under contract, I'm always the skeptic.
No.
Yeah.
You?
Yeah. I'm the negative one in this group. Someone's got to be that.
Obsessively curious. Not
There
negative.
you go. I like
Obsessively negative. Negative. I think that's okay. I think that's what works about this one.
Yeah.
And so I question every rent growth and problem on this one. What helped me overcome this was I could see in the Facebook groups what people were posting on for what they were asking to even then sublease their rooms out. Or when people would ask, hey, I'm looking for a place, there actually wasn't a lot of commenting going on, which tells me that there was an opportunity for us on the marketing side to really take advantage of this.
Well, I mean, Brian also called around, right? I think he called 2 or 3 of the other complexes and saw how much of a rent gap there was between what they were charging, what we were going to charge, and then we kind of back out the amenities and saw that, we were in the strike zone. Plus, I think there's a lot to be said for, while we I think we're still the most competitively priced in the area. with a pending recession and economic headwinds, I'd rather be in that position and have folks kind of come to us because of financial pressures than up at the top of the market.
So I want to go back to one of the questions that we had is why student housing versus conventional. And as we underwrote this deal, you brought up the pending recession.
Yeah.
It's coming.
Yeah.
There's something coming.
I think it's in it already. It feels like we're in it.
Some might say it's already. If we're not already in a recession, I don't know what the hell you call the last 6 months.
Yeah,
exactly.
Look, that's a government spend. So that's a whole different show. That's episode 3. So tune in as we break that down. But the good news about student housing in a recession or pending recession is actually when people get laid off or people start to look for a change in careers, they actually go back to school.
Yeah.
And what we have now noticed acquiring this asset is that ultimately we actually have a lot of graduate students and a lot of international students that are inquiring about living here.
Yeah.
And so, that could be something if you're really looking at investing in asset classes, or if you're looking to place money with operators. Really, number one is go to deepbluere.com. Just sign up for the newsletter. And then you'll get an understanding of what we're looking for, and to see if it makes sense for you to possibly be an investor with us in future projects that we do.
Also, 2 other things, right? Number one is I think access to data and discovery work is super important, right? And part of our kind of thought process on going to student versus conventional. When you look at growth rates in an area and you see that student housing rent growth outpaces conventional rent growth, maybe makes more sense to make a student investment, right? And I think that helped guide us too. And then as we did more and more homework, we saw that the university had its highest application year ever, right? Earlier that year. They had the highest incoming freshman class ever that year. And when we did further research, we saw that they had like 3 or 4 major CapEx projects that they were wrapping up. A huge welcome center, a new basketball stadium, a new football training session, a bunch of the dorms were being renovated. And it's like, okay, if the university is investing that much money into kind of the next generation of the university, this place it's going to be around a while, and B, it's probably going to grow more, which is good for us.
Yeah, it's always good to piggyback off of other institutions' capital expenditures. Right?
Yeah, exactly.
Yeah, 100%. So let's go down and walk us through. So we did our due diligence. What were you guys looking for as we went and visited the property? I made the first one. I was unable to make the second one. Mm-hmm. So the second time is when we were doing our true inspections.
Yeah, that was after we signed the PSA, right?
Yes, that was after we actually executed on the deal.
Mm-hmm.
So the first go around, what were you? I'll go with you first, Matt. What were you looking for? Because that was before we had our LOI, but we had yet to sign the actual purchase agreement.
Well, let's take a step back, because I think there was a lot of key things that we did in drafting and executing the PSA, which helped benefit us before closing and still today. Right? So, with all the changes in the market, we were going to stand, and we did stand firm on the fact that we weren't going to stand in the operator's way to run their business while we were in escrow. But if they were going to sign certain leases, those leases needed to be at or above the rents in our business plan, right? So they were running the property as an all bills paid property with under market rents. What we did is we set an initial rent target, and we were going to start billing back for utilities. And we included that in the PSA. They signed it. We'll come back to kind of what happened later. But after we signed the PSA, we get down there. What I'm looking for is continued evidence of, I don't want to say poor management, but I just did, so we'll stick with that. I wanted to see the faces of the people that were living there. I was looking for nucleuses of communities, right? We have football players, to Nick's point. We have graduate students. We even had a couple of families in there for students with families. And I wanted to see how those folks were kind of melding together. I wanted to see the conditions of the units, right? We saw everything from students sleeping in beds on the floor to fully furnished great places. And I just knew that we had a good mix of people there. We did see some glaring opportunities for minimal investments to upgrade the property. I wanted to see traffic on the main thoroughfare. I wanted to see how many people were coming in and out. We were there for what, 3 or 4 hours during the due diligence that day, right?
100%.
We walked every single unit. We looked at every single bedroom, every single bathroom, every dishwasher, every microwave, and made sure that everything was tight. And I think it just it all came together that day.
Yeah, I mean that's just part of getting your hands dirty. I think that we do. Some syndicators just do too much on spreadsheets and not enough of really diving deep, you know. And that's a really great point. Just to back up for a second on the LOI is actually I always try to bring the actionable advice, right? When you're going to make an offer on the property, it's so important, and this is the big glaring difference between multifamily and commercial investing and maybe flipping or single family rentals or things like that. Is you're going to close on a flip, let's just say, in 10 days, maybe a month, right? Or even a week if you can do it that quickly. And so the offer that you make, it's basically going to come to fruition in that same period of time, in that same snapshot. You got to remember, if you're going to put an LOI on a multifamily property, you're talking probably 60 to 90 days just even from the execution of the PSA before you close. And a lot happens in 3 months.
Yeah.
And so you've got to draft your letter of intent in a way that kind of casts a vision for not only that particular moment in time in which you're agreeing to those terms, but what could happen in between then and your closing day. Yep. And you got to make sure that's in the PSA as well. And obviously we'll get to that, but that became a very big fulcrum point of making this deal work, because a situation occurred during that time that you accounted for, especially ahead of time, and it worked out in our favor.
Yeah.
So that's big, because that happened in the middle of our cap raising and all that type of stuff. And so, but on the due diligence, I think that I was just looking for obvious time bombs, right? It 2003, 2004 build was a solid Class B asset, and you just don't want to walk into a bedroom and just see that the whole thing has just been absolutely destroyed.
Yeah, exactly.
Because then that's going to give you an indication of probably more of the tenant base and kind of the culture around that, and probably a heavier lift when it comes to tenant turnover to get the people in there that are going to treat the property really, really well.
Yeah.
And so I think we were all looking for probably utility opportunities, like seeing the thermostats being revved up in empty units was very, very encouraging, actually, because those are obvious opportunities. And then you're just looking for, is this place being run like a lowest price in town type of community, or does it have a solid tenant base that they just happen to be here, and can you work with this tenant base to create a culture that continues to respect the property? And I think that we've been able to do that.
Agreed. One more thing on the PSA walk, the due diligence walk, right? Actionable takeaway from me: when you're doing your due diligence walk, and even if you're doing your first walkthrough, go with your property manager, right? We had our regional manager with us, and 2 of her lead maintenance people, right? We snaked the drains, we snaked the pipes, we literally went door to door and taking a punch list of the repairs that we needed to do. And it's very, very reassuring as an owner to walk through a property that they've seen and that they know what's necessary. This way, when you finally close, you're not just all of a sudden starting that project, right? We had a budget, a CapEx budget that we built and that they validated and was confirmed on the walk. And we actually removed a bunch of costs after that because we didn't think they were necessary.
100%. And to make that synergy work, I think that it's incredibly important that every book on investing will tell you this, and we live it, right? Like, build your team up front, right? One of the reasons that we're able to have the property management go so deep with us on the due diligence is because we already had that relationship with them. They knew that they were the management company for the deal.
Yep.
It wasn't like we asked a random management company to come out for free and just do a whole bunch of stuff for us, and that was how they earned our business. Like, we have a relationship with them already. We trust them. They're great at what they do in student housing in that area, and this was part of them working with us on an asset they knew they were going to manage, because we built that team up front ahead of time, and that was a massive cost saver for us, and it created a lot of synergies.
Yeah.
And this property manager was a referral to us, right? So this was referred through a mentoring program of yours.
That's right.
And and we were able to go through and check down the track record of what this management company, what they've done in the past. Have they, how relevant are they in the area? Can they help us dissect? Maybe they know the other property managers and how those management companies operate.
That's right.
And just to see, all right, what are the differences and how are they going to work best with us?
Yeah.
Because I will say that us three, number one is that we're all in the industry in some sort of fashion. We're all in the real estate sales business. We're in a real estate data business, and from that angle, we are much more hands-on operators than probably some of the other companies out there. We do weekly KPI calls. We're texting with them daily.
Yeah.
And luckily, that is something that did not turn them or shy them away.
Yeah.
Because there's going to be some other companies that probably would not be able to work with the type of management style that we do.
Yeah. I think the one thing that we haven't talked about, and I think was and is a very strong pro to working with our property manager, is that the owner of the property management company has been a co-GP on deals, and owned and went full cycle on another student deal very, very close to our property, right? Their company managed student deals in both Waco and Austin. She's very active in the market, and it's great to see her growing her own portfolio as she grows her multifamily business, because she's thinking about the property management through the eyes of being an owner. And if there's one thing that a property management company should do, is grow NOI for the owners. And there's not a day that goes by without her thinking about that.
That is for damn sure. It's 100% true. And that just goes back again to building your team, finding synergies that at the end of the day, you are a steward of your investors' capital, and NOI speaks directly to your ability to come through on the projections that you've made. Your whole team needs to understand that that's the end goal. Right? And be working towards that every day. So during negotiations,
that was fun.
Let's dive into that.
There was a couple of passionate conversations in that one.
Passionate ones. Do you want to break us down?
Well, I think in classic broker fashion, right? We got invited to. We made an offer. We were told to sharpen the pencil, given some pricing guidance to sharpen the pencil, and then we get to best and final, and we're in number 2 position, right? And we need to come up a little bit more, and this is the number they really are looking for, and frankly, we just couldn't get there.
No.
So at that point, coincidentally, as we're doing that, we're shopping for financing. So I called one of the brokers that we all know, right? And turns out he had done the financing on the deal for the sellers that we were buying from. So he called the sellers and said, hey, these are great guys. They're going to close, right? Don't worry about getting necessarily the highest price. Worry about surety of close. And sure enough, later that day, we were awarded the deal. Right? And so I think leveraging your network through the negotiation process and turning over every rock will make sure that you've tried everything. You may not always end up victorious like we did, but you can't leave anything on the table.
100%. And this, if you've invested in single family and stuff before, but you never haven't gotten to the multifamily space yet, what Matt just said is such a different dynamic, where in the multifamily commercial space, your ability to close is so much more of a gravitating force towards you getting awarded deals than it is in single family. Really, in single family, pretty much anybody can close. Anybody can go get a hard money loan and do a flip.
When it's going to be,
for the most part,
it's always typically, very rarely does a lower price offer on residential side win. But it's always just going to be highest and best. Right? You got cash, or if you're getting a loan, can you just cover the difference between the sales price and the appraised price if it doesn't appraise? And so, in the larger multifamily, and even in this space, it's a surety of closing, because guess what happens? If we go through an executed contract, there's a lot of times those deals fall out.
That's right.
And you as the operator, you as the owner, still have to operate that asset as if it's not selling, right? And ultimately, that's where it comes in of leveraging the network, like Matt said, is that was huge. This lender that we worked with, the broker, has worked with Matt and I on multiple properties, so multiple assets that we've done through this broker. So they knew that each of us, has the ability and the confidence level to close.
Yep.
And they did work with that seller. And so we were able to leverage all those relationships together and use that to a competitive advantage of ours.
Yep, exactly.
Yeah.
Exactly. And then I think when it came down to kind of dotting the I's and crossing the T's on the PSA, I don't think the actual T's and C's of the PSA were a big negotiating factor because they knew about our background, right? But I think that we did definitely stand firm on including things about the rent,
Yes.
that they should be signing leases at, and the utility bill back, and I'm glad. Yeah, again, we're going to get to that, but
Sure.
I'm super glad that we did that.
So, and then I do want to go down one last thing about property management, right? So when we did choose them, as we were going through it, they weren't getting paid yet, right? So we hired them, and they walked with us through every step of the way, and there was no pushback on that. And this was, we contracted in November, and they started.
We LOI'd in November, signed in January.
Yes. But we did the walkthrough process, during that time, right? The first one was
the first one, our early access period. We did in December, I think.
Yeah, it was.
Yeah.
Yep. Because it was before the start of the new year.
Yeah.
So that she walked it with us on those and kind of went through it, what we should be looking for, and had great strategies. And so ultimately, I would say that every property management company that's going to be vying for your business, they need to start putting that legwork in the minute that you show interest.
Right.
Right? Because to me, that's going to be huge on how their response is with all of this. And then even they were willing to show us the other ones that they were managing and how they managed it.
Yep.
So we went to and visited their properties to see that actually those properties are well ran. They were clean, and the strategies they were using.
Yeah. I want to go over something that we just talked about. Brian referred to an early access period, or Nick, might have been you, right? So for those kind of new to the game, when you make an offer on a property, you have to spell out your earnest money, and for a long time there, quote unquote hard money was the norm, right? So you were going to sign your LOI, you were going to sign your PSA, you were going to give earnest money, and then some portion of your earnest money or all of your earnest money would go quote unquote hard at some point. Sometimes it was the day you signed the PSA, with a certain number of days after due diligence, etc. That's kind of changed in this market, but it's still out there. What we did, the way we structured our offer, was that we were going to put our 2% earnest money down, right? And a portion of that was going to go hard when we signed the PSA, so that the seller knew that we were committed to the deal. By that time, we had done extensive due diligence, etc. But we included an early access provision in our LOI. What did that let us do? That gave us unbridled access to the property, the plumbing, the electricity, all the key appliances, etc., before we signed the PSA. So we had been in there and really walked almost every unit before we even signed the PSA, and then went back after we signed the PSA for a more thorough due diligence with our property manager. So if you're going to put non-refundable earnest money down, team, I think be very, very selective with that in this market. But if you're going to do it, make sure you write in an early access period in your LOI.
Yeah, 100%. So we get through the early access period.
Yep.
We get to the PSA. Before we get to the PSA,
I thought the best part of the PSA actually was when the broker was calling us like the day after Christmas to ask if we were going to sign yet.
Yeah,
I'm like,
yeah,
dude,
yeah.
I haven't even taken off my Christmas PJs yet. Leave me alone.
Yeah.
It was a whirlwind.
Yeah. So walk us through that, because when we were the early access period, then Christmas, and then we were starting to sign the PSA, we had changes even in that part.
Yeah.
Right? Because as we were underwriting it,
we got the insurance quotes back.
Yes.
Yeah.
All right. That's what I was going to say. The key challenges before even the major key challenges, and I'm going to say that probably everyone is going through this right now, that it's either property taxes or property insurance right
Or
now.
both.
Or both. Yep. If you're lucky, like a lot of us are, you get to experience both of those. And so that was our biggest hang up before we truly signed that PSA.
Yeah, we weren't going to sign unless we got an insurance code that fit the model.
Absolutely. And so walk me through that, because I've blacked out since then.
No. So what happened? There's pros and cons about buying a property at less than it would cost to build new, right? And when it came time for us, as we started to get really, really serious about the deal, the LOI was accepted. We had gotten some early indications of insurance costs,
Right.
And then we wanted to get that really, really firm before we went non-refundable on the deal. So we started to get insurance quotes back that were based on the replacement cost of the asset at $150 a square foot,
Right.
versus the acquisition cost of the asset at $100 a square foot.
Right.
And the difference between those two numbers blew our insurance projections out of the water.
Right.
So that gave us huge reason for pause. We were probably in touch with 4 or 5 different insurance brokers all at the same time. Not only is insurance very, very costly these days, but is slow as you know what, right? And it took weeks to get insurance quotes back.
Yeah.
Sometimes, I think one guy took almost 3 months.
Yeah.
Right?
Yeah.
He didn't
go
get
with
that-
him.
Yeah, he didn't get that deal. But here's the difference that because you would think, look, insurance is boring, and you think it should be all the same.
It's not.
It's not, because it's how that broker, and look, I don't know if this is them as salespeople, how that they're going to explain it to you or to us, and they're looking at obviously trying to go with the cheaper options, because that's we said we number one is we underwrote it at a certain amount, so we need to know exactly what's going to get us the best coverage at what price.
Yeah.
Some of these are saying, well, if you go with this lower one, that's going to help you out. We can't guarantee that it's at your renewal that it's going to stay there.
Yeah.
And it actually did not cover if God forbid a tornado or a massive fire happened and burned down everything. We weren't confident that it could replace everything.
Yeah.
And we were getting sold on some of these.
Yeah. Remember, we got one quote. It was a low quote.
Yeah.
It had the property value that we were looking for.
Yeah.
And they're like, oh, we're going to bind it, right? So we get the documents. The second question was, by signing here, you assure that there's no students living in the property. I'm like, how did we just spend 3 months on this?
Yeah.
And we're still wondering if it's student or not, right?
Yeah.
And so we did not take that policy. And ultimately, we found a policy that had the replacement cost coverage. Team, huge difference between ACV and replacement cost. Always go with replacement cost, right? We had the deductibles that we wanted. We're very overinsured compared to our purchase price and the value of the replacement cost. But man, you got to be careful, because if we had signed that, I'd be losing sleep if we signed that policy.
If we didn't read it all the way and understand it, and the broker, the broker on that one was like, yeah, they don't really check on that. You just sign it; it's just formalities.
Yes.
And I'm like,
until something goes wrong.
yeah, formalities. Look, I understand formalities, but when it comes to insurance companies are also trying to find every way not to pay you full coverage.
Yeah.
And so my thought process behind that, and that's where we all came to that conclusion at the time, is that we need to go with one that, like you said, it's not going to make us lose sleep at night, because there's plenty of other ways that we can lose sleep.
Yeah, trust me. Right? Like, I think a general kind of thesis around this entire conversation, a lot of conversations, because if you're looking to start investing in these types of deals, there is a reason that really, experienced multifamily investors or syndicators or whatever will always tell you that the hierarchy of analyzing an opportunity as an investor always goes syndicator, deal, in that order, right? Because a lot of syndicators can get deals done, and they can get what appear to be really good deals done. And there are a lot of ways to cut costs. There are a lot of ways to do things to enhance returns that are very risky. And with multifamily especially, there are a lot of moving pieces that if you get one piece of the puzzle out of whack, it can take the whole thing down. And so I believe that's why working with the right syndicators is so important, because they have to operate off of the right the right principles, right? I watched that movie Air last night. Have you seen it yet?
No, was it
bro.
good?
It's on Amazon Prime for free
Already?
now, bro. I know. I was so excited.
Wow.
It's really good. Check it out. But it has.
By the way, that book was great.
Shoe Dog?
Yeah.
Yeah, it's fantastic.
Yeah.
I gave that to Dana to read, and she hasn't yet. Movie, it talks a lot about like the Nike's laws in there. They're a company of principles, like all their laws and stuff. And I think that's one of things that we'll create for our company as well. But the first one's always obviously that like everything that we do, and I think we showed this organically in our conversations about the insurance, is like everything that we do, we start with the premise: is this best for the investors? Because we could have made insurance cheaper.
We could have.
Yeah. And we would have been towing a line on, are we creating a possible time bomb that not only us, our investors will have to take the brunt of in the future if it goes off? Let's just avoid it completely, because our principle is that it's not good for the investors. It's not good for the deal.
So let's talk about the insurance process, because I think there was a huge disconnect here, right? So in the course of us doing our insurance due diligence, we reach out to the broker that has the current insurance policy.
Right.
And we say to the broker, hey, broker, we're looking at this property. We know you have the coverage on it, and we know that it costs X per the financials. And he says, no, it doesn't. And we're like, what? He says, no, it's like X plus $12,000.
Yeah.
So that doesn't sit well with us, because all our modeling is based on the insurance cost plus some growth.
Yeah.
And that would drive the insurance cost 30 to 40% higher than what we budgeted for.
Which is, in the financials they gave us
Several times.
which is a big no-no.
Yeah.
Of not giving full disclosed financials.
Right. So we go back to the broker and say, hey, there's a material difference here between actual cost versus what's on the T12. We're still interested in the deal, but now we want an X times 3 escrow set up by the seller to be paid at closing to cover our difference in insurance costs between what we had underwritten based on your disclosed financials and what it's actually going to be.
Right.
And they pushed back on it for a while. Took us weeks to work through that. Right.
Their position was that it was our job to know what insurance was going to cost, which in theory is a certain way to look at it, I suppose. But then materially disclosing what your costs are, and that a divergence between what they really are, muddies the waters.
Yeah, exactly.
Right. So we can only go off the information that we're given.
Exactly. So we ended up finding an insurance policy that worked for us and for the better, the best interests of our investors. We also ended up with a sizable mid-5-figure insurance escrow that will help us offset the cost of growing insurance concerns for at least 3 of our 5-year hold period. Right. So it was great that we were able to absorb that into the closing and the PSA.
So we get past that hurdle with a negotiation. This is what I personally love about the syndication side, is the intellectual challenges that you get to solve. It's all kind of discovery work and negotiating, and it can actually be enjoyable when it works out. Things are going smoothly after that.
Yeah.
And we're getting close to closing.
Yep.
And this is why it's so important to keep up with the financials.
Yes, sir.
And continue to get disclosed financials in between the signature of the PSA and the closing date. And this goes back to the stipulation that Matt put in the LOI originally, because their financials and the stipulations that we put in the LOI, they came to fruition. We had to negotiate that out as well.
Right.
So break down kind of what happened there, and then how we talk about how we handled it.
All right. So we're supposed to close on a Thursday, and we get updated financials, T12 and rent roll, delivered to us from the broker on Monday afternoon. Mm-hmm. Now, mind you, we had the LOI accepted in November. We did our initial inspection in early December. We went to PSA in early January. We did our full due diligence, call it early to mid-January. So we're months into this now. And the seller agreed to certain terms in the PSA about rents and utilities for new leases. They signed. Oh, there's a whole nother thing. Hold on.
Oh, so much happened. I forgot.
We found out that they had no renewal plan for a bunch of leases that expired at the end of December.
Right.
Right. And so we had them make certain assurances to us about those units. Right.
It was like 18 leases, wasn't it?
That's right. It was a lot. It's like 18 leases. So we get the updated T12 and rent roll 3.5 days before closing. And it shows on that rent roll that 9 leases were signed of those 17 vacant units. And not only were those leases signed, but they were signed at less than the amount we agreed on at the PSA.
Yes.
Right? So that was Monday night. I think Nick's head exploded,
Nick,
right?
Dude.
Nick, we started to get on the phone at like 8:15 the next morning, and Nick was not happy, right? Misrepresentation. We're not, they broke the contract,
Nick was going to
etc.
sell all his possessions and just become a vagabond and want. He was done with everything, bro. He was done with his family, his life. He was just done.
And so we get on the phone with the broker, and he's like, "Why? Are you upset that they're signing leases?" Like, no, it was great, but they didn't hit the numbers that they signed, that they agreed to. Yeah. And we figured out what that was going to cost us.
And it wasn't disclosed.
Correct.
Yeah,
right.
Let's go back to number one is it wasn't disclosed. Yeah. Then the second part, it wasn't at our market rents that we underwrote for. And two.
And that we put in the LOI.
And yes,
PSA.
PSA.
And the third thing is they didn't even take security deposits on these. Like the amount of due diligence or background checks or whatever just wasn't there. They were just putting bodies in rooms, trying to collect something.
Mm-hmm.
And as we go down that path, that's why my head was exploding.
Sure. Yeah.
Because they don't, like, if we didn't follow the contract, they would be unhappy.
Absolutely.
They would have held us accountable, right? Absolutely. So, but they didn't, that accountability wasn't a two-way street. So we get on the phone with the broker, explaining everything to the broker, explaining our position, and I think Wednesday afternoon. So again, we're supposed to close Thursday. Yeah. Wednesday afternoon, we had a call with the broker and the 2 sellers.
Right.
And the seller gets on the phone and says, "Hey, I understand you guys have a problem with us making you more money signing leases." Like, whoa. Nick's not in the mood for this right now.
No.
Not the right way to start this phone call, right?
And look, the sellers are good people overall.
Yeah, no, they're great guys, right?
They're
but
good.
it's just,
the sellers are good people
and look,
overall, but I think ultimately,
they were caught in a jam.
I think ultimately they were in a bind. There wasn't a lot of exit strategies for them other than to figure out how to get this sale to go through. Because they didn't. Their renewals weren't there. Their lease ups weren't there. The option probably to refinance was probably no longer on the table.
Definitely not.
So they could either hold on to this asset that would end up costing them a lot of money, or to figure out how to make it right to sell to us.
Yep.
And ultimately, if we go back and replay that whole thing and how all of that went down, that should have been the conversation. I think ultimately, here's what I'm going to do. I don't like to play the victim or blame card, but I'm going to blame somebody on this one. And I blame that broker for not being the right facilitator of keeping that in control. And ultimately, like we said, those sellers, they have a great reputation in the marketplace.
Yeah.
So this just wasn't the right product for them.
Sure.
And we did have an agreed upon contract that had stated terms.
Yep.
And I feel the same way about the broker. Actually, just texted us this morning. He's a good guy too. He just caught in a position.
No, just kidding.
Yeah,
He's awesome,
just caught in a position where he was trying to make a deal work with a seller that his fiduciary obligations to the seller, and the seller wasn't really abiding by the PSA, and he wants to get the deal done as well. And so you try to keep everybody level-headed, but also there's comes a point in time where people like Nick aren't going to be level-headed because we got business to handle here, and we got a signed agreement that we have to adhere to, and so we had to have a sit down, and I think that conversation went really well.
It did go well. That conversation went well. The next morning
it ended well.
It ended well. The next conversation, the morning conversation with the broker did not go so well.
Yeah.
The day of closing, right? So if we go back through that because that was Wednesday afternoon we did the call.
Yeah.
And Brian, who is always the most optimistic guy out of this group, right? He will find a positive out of any of how that call went or anything.
True story.
Matt and I we can both. I'm going to say that Matt can also.
He absolutely.
Yeah.
Hey man.
I don't know what you're talking about.
Look, you're a New Yorker.
Yeah.
Exactly.
Right? Like, you're a New Yorker. Like, the New Yorker started to come out to you on Thursday morning.
Definitely.
But ultimately, and this is the best part about this show, right, is that we're not going to hold back. We're going to show you, number one, why we believe that we are operators that we all want and hopefully people want to invest in and with. And that we're going to go to bat for your money, our money, and be the best stewards of it. And we just didn't put up with it.
Yeah.
And ultimately, the way that call went is we could either close and you come to our agreement of terms, and there was some compromises, or we can all have our attorneys handle this, and then no one wins other than those attorneys, who then we would have to ask for investment in the project, because obviously they would make a lot of money off of those legal fees.
Right.
And so I think as that call wrapped up, what we found is with Brian's optimism of trying to keep that going and on the right path, is that we just got to the end of that call, and what did they say? Let's just figure out how to get the deal done.
Yeah, exactly.
Which is what we all wanted in the first place.
Exactly.
100%.
We had 4 months worth of work into that deal at that point. It would have been brutal to walk away.
Yes.
And
I mean, at 9 o'clock in the morning on Thursday, we weren't closing.
No, we were all pretty damn sure we weren't closing.
Yeah.
I was at the gym. It was bicep day.
Exactly. Nick's just throwing.
I'm at the
weights around
gym,
like a maniac.
and it just, again, it was still we had thought we'd come to a conclusion that Wednesday night. Thursday morning comes around, and we're still just. It still was redundant about what we were talking about. That leases weren't handled correctly.
Yeah.
And we had agreement. And so ultimately it came down that Thursday morning, it's either the same conversation from Wednesday, we will not close unless these terms are hit.
Yeah.
Yep. So let's get to the resolution.
That's
right?
kind of what.
Go ahead.
Go ahead. So ultimately, and I'll let you break down the details. The resolution was, we had a part in the PSA that accounted for the vacancies that came up after we signed the LOI, in between then and when we signed the PSA, and how those should be handled if those properties or those beds get leased by the current property management company, what rate they have to be at, and at what terms, meaning the background checks for the tenants and things like that. Those were not followed, and so I'll let you kind of break down the details of how we resolved that.
Yeah, so we ultimately got 2 things out of that conversation. Number one is we got a credit at closing for the difference in the rents over the remaining months left in the term of the leases that were signed.
Yes.
Right? So important note, team, like leases take a long time, right? And decisions you make on leases last for a long time.
So let's just say $50 a month on a lease doesn't seem like much.
But you do that times $50 on the lease and $50 on the utility, right? And so that's $100.
Yeah.
Times 12 is $1,200.
Yeah.
I'm good at that math,
There you
right?
go.
But then you think about the fact that that's a 5 cap,
Right.
And that that $1,200 is worth $24,000 in equity on your balance sheet,
Yep.
right? Now you do that times 17 units, and it's hundreds and hundreds of thousands of dollars, right? So we got them to set up an escrow to give us X dollars a month for those 17 beds. And of the 8 or 9 that were signed without our knowledge below market rent, what they agreed to do was give us the delta between what they leased those units for and what they had agreed to in the PSA as a one-time credit at closing. Right? So now we're getting paid on those vacant units for 6 months.
Right.
And we got a credit for the one that they undersold on at closing.
Yep.
All win-wins for our investors.
Yep.
Took a couple of years off our lives to get there.
Yep.
And I had a little less hair on this giant forehead of mine by the end of the day.
Right.
But we were literally signing documents at 1:30, 2 o'clock in the afternoon for a closing at 3.
And I think that's just such a, what you said before, I want to almost just harp on that in bold and underlined letters when you're analyzing deals. And you've got to work with people that understand the basic math and how to extrapolate that to your asset value and how it affects your business plan over time, because it does seem like, oh man, $50 or so a bed, not that big a deal. it adds up when you talk about NOI divided by cap rate to hundreds of thousands of dollars in asset value, where you think, oh, the difference between, let's just say, 1,000 and 1,050 or whatever, it's not a huge deal. That might have devalued your asset by $500,000. You didn't even really realize it.
That's right.
And
you're going to bat for your investors' money.
And that's at the end of the day, that's your principle.
And I believe that a lot of operators that entered the marketplace while everything was hot got in because they saw the easy money.
Yep.
They got in to make the management fees. They got in just to fee everyone to death.
Yeah.
Mm-hmm.
And now we're seeing that people are getting exposed, and there's some bad investments out there. And so ultimately what we wanted to do and what we believed in as our core principle is that we're going to treat everyone's money like it's our money, and we're not going to put it at risk.
Yep.
Yeah.
Right? And that Thursday morning, if it didn't close, then we would go back to our investors and say, this is the reason why we're not closing.
Yep.
We're not going to put this on the line until this is resolved.
Yep.
And look, we didn't have to go that way. It did get resolved, and we closed on it. And as we're now a few months into this, we're ahead of we're starting to get, actually we're accelerating our projections a little bit because we do see the demand is there.
Yep.
And the property management team is working really well with us. We've started to implement the CapEx, which is the water saving devices. So that was first, and all the toilets, all the faucets have been changed out. Yep. The property management team worked with us on identifying, not always turning and updating all the apartments right away, unless it was absolutely necessary.
Yeah.
And we just got. And you can go, well, eventually if you sign up for our newsletter at deepbluere.com, you can see that we just had was she a former student or student?
I think she was a former student.
She was a former student.
Former student of Baylor who
Yep.
painted a very beautiful mural
Yeah.
on the exterior of two of the buildings that face the street.
Yep.
And we're starting to.
I think it looks awesome.
It looks great.
Yeah.
And so we're just seeing that as we put our energy into it, and the property management team, we all start to click, and that this is turning into a really great opportunity for our investors.
Well, this is the fun part, right? Like, this is why you go through all the headaches and the phone calls and the negotiation stuff, because watching a community improve and having a small part of that, it's pretty cool. Watching an asset that was kind of just neglected become a vibrant part of the community again. That sounds really sappy, but it's pretty fucking cool.
It is. It is very cool.
Are we doing that on this podcast? Sorry, I need to edit that out, Jesse.
Yeah, we can do it. We can let one. We can let one fly. But,
It's pretty cool.
Yeah,
it's pretty cool to see.
So, as we wrap up on this, what we're starting to see is that we're starting to see that there's other major opportunities.
Yeah.
Right. And on this one in Waco that we picked up is that it wasn't a truly rundown asset. It was a mismanaged asset.
Yes.
Right.
And we're starting to see more mismanaged assets that are now coming to us that are off market, so we're not having to compete.
Right.
We're underwriting opportunities for owners that are having their debt start to come due, or maybe they've got floating debt.
Yep.
And so that we will start to see over the next few months to a few years a lot of good investment opportunities for our investors.
Yeah.
And so I've said it multiple times. Just go to Deep Blue RE, Deep Blue. So it's Deep Blue Capital, except deepbluecapital.com is owned by a Amsterdam company or something like that.
They're probably cool too.
Yeah.
We might do a little crossover with them. Who knows?
Yeah, I mean, we can be international. But just go to deepbluere.com and sign up for the newsletter. That's all I ask, is just go to the newsletter and leave us a review and share this out. Like, this our company and our group is for people that, just want to diversify their income. They want the tax write-offs.
Yeah.
Right? They want to get, they don't have the time to invest.
Right.
Or they don't have the knowledge, right? And then when you pull your money together like this, you can get a smaller piece of a larger pie that ends up still a big piece for you.
Yeah.
That's right.
And then on future episodes that we're going to be breaking down, we're already starting to see, like, we want to really break down what are the myths, what are the concerns about investments in acquisition companies like ours, capital groups like ours. I heard I was talking to a parent at my son's school the other day, and he was mentioning one of his buddies invested in, and it was a family deal.
Okay.
That just went absolutely off the rails off.
That's terrible.
Yeah. Really? And right. And so again, who you invest with matters.
Yeah. I think this whole business has gotten very glamorized over the last couple of years, and right now we're separating the wheat from the chaff. Right. I had a conference that I attended last week, and there was a handful of operators in there wondering about the market because there's been so much incoming interest from an investment perspective with the wrong operators, right? Operators that would come in and look for any ways to find value, and they would cut staff and they would eliminate payroll, and these are properties now that are suffering from vacancy and vandalism and flagrancy and all kinds of stuff, and it's kind of bringing down neighborhoods at a time because the properties themselves have gone out of control, and that's just not us, right? I mean, the three of us were in communication pretty much all day, every day. We're talking to the property manager. We're fielding Facebook Messenger ads and all kinds of stuff. Brian's phone gets blown up. I mean, what the two of you guys have done from a marketing perspective is unbelievable, and we're just in it. Yeah. Right, we make the time for it, and we're going to make our investors successful.
100%, boys.
So episode 3 is in the books. Be sure to go back to listen to the first one. The first episode, look, it just breaks down who we are, right? So you get to know us a little bit better, and as you go through this journey with us on the upcoming episodes, we're going to have amazing guests on. If you want to be a guest, maybe you've invested, you've done really well. Maybe you've done some more specialized investing. We'd love to hear from you. If you've got amazing vendor connections, let us know. Go to deepbluere.com. Sign up for the newsletter. Reach out to us. And we have Facebook pages, LinkedIn pages. If you just go look us up, you'll find us. We are everywhere.
Should we wear Deep Blue shirts next time?
Definitely. That's why I wore mine today.
Well, that's not deep blue. That's royal blue.
That's royal blue.
That's definitely not deep blue.
People comment on this.
That's really deep blue. We'll get some.
This is deep blue to me. This is deep blue to me.
That's definitely not deep blue.
Anything that's not a black shirt is so out of character for me.
Here's what I'll tell you. I was thinking today as we were getting ready to shoot this, is I don't have a deep blue polo shirt, and I don't know what to wear on a podcast, because on our other show I always wear my my residential brokerage company's stuff, because that's all that I have.
All right, so I will go get us navy blue polo shirts, and by the way, we won't write that off on the company.
Fair enough.
Okay,
thank you.
You're welcome.
Oh, that's so kind.
Give me some sizes.
Extra large.
Medium for me.
But I need the sleeves to be a little tighter. Extra large, but tight.
I can tailor it for you.
Okay,
nice.
thank you.
Cool. Like one of those built shirts. You want one of those built shirts?
Yeah,
exactly.
We'll get navy blue built shirts. That'd be awesome.
Those are good.
Yeah.
We'll flex them.
There we go.
All right, guys, tune in for episode 4. Go listen to episode 1, and just let us know what you like about this. What could we improve upon? Maybe it's less talking. Maybe it's more talking. Maybe it's whatever it is. We're here for you guys.
Show the guns.
That's right. DeepBlueRE.com. All right, guys. We'll see you next time.
Appreciate it.